Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out what companies are really up to. Today we're diving into an 8K filing from IBM, and I promise it's more interesting than it sounds, especially if you like corporate makeovers, or at least that's what they want you to think. We are going to decode IBM's latest moves and see if they add up to real progress or just a new coat of paint. In a nutshell, IBM is changing how it reports its revenue. It's like rearranging the furniture in your house but claiming you've built a new room. The company says it's reflecting the market better, but we're here to see if it actually reveals anything new about IBM's performance. IBM is tweaking its revenue categories within its software and consulting divisions. They say this will better reflect market opportunities, basically. They're reorganizing how they present the money they make from different areas. IBM is saying it won't actually change their overall financial results, just how those results are shown. To help everyone understand these changes, IBM has published information and recast, meaning redone their past financial reports from 2023 and 2024 to fit the new categories. It has been published on their investor relations website for everyone to access. This includes some non-GAAP numbers, which are financial measures that aren't set by standard accounting rules, along with how they match up to the normal financial numbers. Amtaf reports from 2023 and 2024 to fit the new categories. It has been published on their investor relations website for everyone to access. This includes some non-GAAP numbers, which are financial measures that aren't set by standard accounting rules, along with how they match up to the normal financial. The company has provided additional information on this update, including recast historical segment financials for 2024 and 2023. Let's see what's really going on under the hood. Let's start by looking at some numbers. In software, they broke down their revenue into automation, data and AI, and transaction processing. In automation 2024, revenue was about $6.7 billion compared to roughly $6.5 billion in 2023. That's a growth of about 3%. Now for data and AI in 2023, that's a growth of about 3% now for data and AI. In 2024, revenue was about $8.9 billion in 2023. That's a growth of about 3% now. For data and AI in $20 billion in 2023, it was about $8.3 billion. In 2023, it was about $8.3 billion in 2023. 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 It was about $8.3 billion in 2024. Compared to $6.9 billion in 2023, it was about $8.3 billion in 2023. It was about $8.3 billion in 2023. It was about $8.3 billion in 2024 compared to 8.4. Next, let's check out the consulting numbers. They broke down their revenue into business transformation, technology consulting, and application operations. Business transformation revenue in 2024 was about $8.1 billion compared to $7.6 billion in 2024, was about $8.1 billion in 2023. That is a growth of around 5%. Application operations revenue in 2024 was about $8.6 billion, but was around $8.1 billion in 2023. That is a growth of around 5%. Application operations revenue in 2024 was about $8.5 billion compared to $7.6 billion in 2024, was about $8.5 billion compared to $7.6 billion in 2024, was about $8.5 billion in 2023. That is a growth of around 5%. Application operations revenue in 2024 was about $8.5 billion, compared to 4 was about $8.5 billion, compared to 4 was about $8.5 billion. So what does all of this mean? It looks like IBM is trying to highlight where they see their future growth. Data and AI in software shows a good jump in revenue, and that's definitely a hot area right now. The growth in business transformation and consulting also is pretty good, which may mean companies are turning to IBM to help them adjust to new technologies and strategies. On the other hand, transaction processing staying flat in software is not a great sign, but it is stable at least. Now, let's put this all together. IBM is making some changes to how they report their money coming in, reorganizing the categories within software and consulting. It seems like they want to show off areas where they are growing, like data and AI and business transformation. Now, this doesn't change the total amount of money IBM is making. It's really more about how they present that information. IBM seems to be trying to position itself as a key player in areas like AI and business transformation. And this reporting change helps to make that case, or at least paint that picture. The fact that they're not changing the overall financials is an important point, because it means they're not hiding anything. It's more about emphasizing certain areas. T now for my opinion. IBM is a huge company, so it moves like a big ship, meaning it takes time to change direction. I think these changes of showing different sectors may be a good sign that they're trying to become more focused on growing markets. They are very, very far from being a small startup, but if they keep reorganizing their focus, then they can be something great. One risk I see is that by highlighting certain areas, they might be downplaying others. If transaction processing continues to struggle, for example, it could drag down their overall software performance. On the other hand, if they can keep growing in AI and business transformation, IBM could be a leader in those fields. So to sum it up, this filing shows IBM trying to sharpen its image and focus on key growth areas. The numbers show some good progress in those areas, but there are also some challenges to be aware of. It's not a complete transformation, but it could be a step in the right direction. Thanks for watching. If you found this interesting, hit that like button, drop a comment with your thoughts on IBM, and subscribe for more corporate deep dives.